you. Welcome to Forex.Today. It is a Monday. Let's see. Yeah, the 8th of May, 2017. My favorite day ever today. A little bit of technical difficulties, as you can see. So we'll get through it together. Love will find a way. So g'day, mate. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma. Good morning. Hello. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. Thank you so much for being a client. We appreciate you. I am here to help, to answer your questions, to share analysis, to earn your respect and loyalty. We do that by providing these webinars for you. One day, if you're not a client right now, one day we hope that you'll open a demo account or even venture to fund a live account. And we'd like to be the prime brokerage for your successful Forex trading business to work together many, many, many fruitful years. You as the trader and we as the service provider. We do these sessions every single day, Monday through Friday here at Forex.Today. 7:30 a.m. That's New York time, but it's also approximately London lunch. A good time for us as a team and as a community to get together and realign our satellites. So today, what I thought we could do, since we're at Forex.Today, is go through the calendar, look at the event risks and opportunities for the week. How do you feel about that? Let's sort through this. Okay. Okay. Kiwi news? Not till Wednesday, huh? Guess we can go all the way back to like this Aussie here on the calendar on Forex.Today. It's highlighted as important, and you know what? I don't think I've ever traded that. Yeah, believe it or not, I don't think so. Maybe I have. I could see how it'd be important, right? The two big things, fiscal and monetary. Well, this would be fiscal. Pretty cool. NZ interest rate decision, monetary policy statement, the press conference. That's the doozy. And now remember too that it's the statement really, because the decision is likely priced in, but it's the not to the decision. What I meant was the statement, because the statement can be forward looking. It's a guidance. How do they feel about the economy and where it's going to be in 6 and 12 months? Remember how we were talking about this at Non-Farm Rules? And recently, in our normal webinars at Forex.Today, we're talking about having a forward guidance. Well, they're PhDs and economists and they're quants. They've already crunched all the data and they basically give you a guidance. So, why not use that? So, at the very least, download the statement. Thursday, Bank of England's turn. Okay. Interest rate decision, minutes from the recent meeting, monetary policy summary, lots and lots and lots and lots of great, fantastic information available to you for free. And will help you create your bias for the Great British Pound. So you could talk about it in the near and distant future, but more importantly, plan. Should you be a buyer or should you be a seller? If you're, a buyer or a seller now, you expect to continue to be so in the distant future, and why or why not? Those are all the right questions to be asking. And then Friday, way out Friday, May 12th. Retail sales, very important in the United States. Consumer price index, very important. Okay, skipping the German stuff, whatever. All right, but this is important because 70% of the American economy is on the consumer. That's why it's such a big, powerful economy. It can survive on its own. So, like we talked about China trying to create its own consumer economy. That's great. Why? Well, right now, if the rest of the world goes into recession, or even let's say a major trading partner, let's just say Europe. Europe goes in recession. It hurt China a lot because it's an exporter. And if people are not buying their products, even if it's not their fault, they suffer the consequence of that, which means their own recession. The United States, however, the rest of the world can be in recession, which it is, and the United States could just chug along. That's kind of an important thing, right? And so retail sales and consumer price index, they're highly consumer focused, obviously. And you want to see retail going up. You want to see a little bit of going up. The rate in which it goes up is important. Most likely it's not going up because of a reasonable fall in oil, right? From 55 to 45. Okay, I was going to do a commitment of traders too, but with all these PC problems, it's struggling to broadcast all this. But let's try it on. Let's go for it together. Hey, just try to make the best of it. Hey, thanks to the dude posted his picture. A handsome devil, huh? What's that on the wall? Okay, Well, at the very least, we'll do euro. We'll see how slow it is. You see a dramatic change here? A lot less bearish. Why? Well, let's take a look. Are there any buyers of euro week over week? Remember, the euro skyrocketed. You remember that? Look at this. Look at the gray line, week over week. Did anything change? No. Over the last 2 weeks, there are less people selling. That's it. It's remarkable, isn't it? We talked about it while it was happening. Like bear. I'm going to look to sell. I'm going to sell it high, maybe near a psych level. Isn't it fascinating? Or is it just me? I think this stuff's fascinating. Where the euro dollar goes up several hundred pips. And I'm like, yeah, it ain't bullish. It's going up. Oh, yeah, it's going up. But I'm not a bull. I'm just going to sell it high because I still believe it's bearish. And at that particular moment, the market is perfectly neutral. There are just as many bulls as there are bears. Well, what have I been saying about the euro dollar over the last, I don't know, month and a half? I don't even want to look at it, right? Have you noticed that? Like, yeah, euro dollar. Oh, there's a big gap. Yeah, I don't want to look at it. Why don't you trade it? There's a big gap. Yeah, I don't want to look at it. I'll find some things. Why? Well, the market's neutral. Why do I want to get involved in a neutral market? Right? It's not that I'm disinterested in euro or disinterested in dollar, but the market's neutral, and I'd prefer to have a trend. Wetty, interesting, huh? Don't you think? Relax. Okay. Any change in buyers week over week for the Great British Pound? I think is valuable information. In fact, you can go back a year or more. There generally hasn't been much of a change. The range is pretty tight, right? As far as the number of contracts open. At the higher end of the range, okay? A lot more shorts, huh? A lot more shorts. Market is net bearish. There's been a decline in bears recently, and price has been going up recently. Well, what, 3, 4 weeks ago, there was an increase in bullishness, and then some bears have come out of the market recently. Not a lot of bullish activity, but there was an increase in volume, if you want to look at it that way, about a month ago. And the bulls have stayed in and the bears have got, well, what's happened to price? Generally gone up. So once again, not really bullishness in pound, but less people buying dollar, for example. Because maybe it's not that their bears are coming out, but dollars, people buying dollars, for example. So, anyways, a lot of shorts mean price will rise. Well, no, a lot of shorts mean price will fall. A lot of shorts leaving the market means price will rise. Okay, here, look at all the bulls leaving. And then last week, some stabilization. Well, we know we've hit some key pivots, haven't we? And perhaps it did its job. Okay. And then look at the bears here. Less bears, less bears, less bears. So less bulls, less bears. Okay. Pretty interesting. Okay. There are more bulls than bears. That's what this black line is. You have to look at the zero. Okay, see? The zero. This is the number of contracts, one way or the other, right? And because the black line is above the zero, there are more bullish contracts open than bearish. So you add up this gray area line with this light blue line, and you get the black line. If there were more bears, this black line would be below the zero. Okay, so it's just number of open contracts plus, or let's say minus in that case, the number of uh, bearish contracts. Okay, and if that's a negative number, then you get down here. And then this darker blue line is just simply the price of the Aussie dollar at the moment, just about 75 at that time. Okay, market's been about the same for a while, but notice it's not necessarily the same. It's that trading volume has declined a lot. Look at all these bulls coming out and all these bears coming out. Now the market's still neutral, but it's thin compared to before. Okay. Let's do some technical analysis. So I guess this is week now. 4 weeks ago, gold coming down to like 1234.56, something like that, and that it should stop. And then we had to update that with the new pivots, new monthly pivots at the beginning of May, so 9 days ago. We had to adjust that to 1230 to 1217. The actual low right now is about 20, about $3 off the bottom. And now that what we've discussed is that should hold. That should be the bottom for the month of May. And all of a sudden, it kind of looks like an inverse head and shoulders, doesn't it? Could be a rabbit, could be. Be quite a coincidence. Now, if you were a buyer of gold, wouldn't it be important to know that this is the lowest price that you project for the month? That'd be very important. So anyways, it dropped precipitously and stopped. Now, a gold bull would try to swing back this way, wouldn't he? Yeah, Peter? Well, instead of aggregating all that data, you could just use a dollar index, Peter, which is basically what you're looking at. Perfect. Yeah, yeah, I told you. But that's, the COT data, because it's futures contracts, they're all in dollars, right? So if you want aggregate data, use a dollar index, which is, in that case, it's not, it's just simply looking at each currency versus the dollar. Okay. Also, last week we had $44, let's call it $45 as the projected for the month. Even though we started way up at 55 almost, it dropped down to 45. The projected low was actually $44.86. It dipped below there briefly, and you could see on the headline, boom, chow, straight back. Crazy, huh? Isn't that crazy? Look at that. NFP, hello, wow, straight back, instantly. So let me ask you, do you think there were buy orders? Take profit orders, actually, because I don't know if there are buy orders. But we assume this spot right here is a place for lots and lots and lots and lots and lots of take profit orders, right? Remember my one rule? I might have two rules, I don't really know, but my one rule, if I had one rule, take profit at S2 or R2, right? Maybe you guys don't know that. Does anybody know that as a factual statement? Maybe something that you learned many years ago? 'Cause maybe I don't teach it as much anymore. I don't know. I got some stories about the R2 and S2 and all that kind of stuff, but maybe I don't teach it as much. Oh, Greg says it's in the book. All right, well that's good then. Wasn't sure if it was like something you had to do. But anyways, it's part of my assumption, okay? I mean, M1 and M4, they're nice, but they're not support and resistance, right? They're conservative targets. Okay. Tucker says it's in the book. All right, cool. So, that's almost 10 years ago that I wrote that, right? So it was important to me 10 years ago. It's still important to me now, but it's an assumption. So, like, I don't actually know what this is. So, how would you describe this if you had to write a book? How would you describe, like, why the market dropped like a ton of bricks and instantly did a full on stop and reversal? Well, Brendan says I put it in the swing class. Oh, good. See? Good. So, the way I describe what happened, and more importantly, why it happened, was that smart money had limit orders, like take profit orders. They were, first of all, bearish. And second of all, I could predict, in this case, what, 7 days in advance, because I think this was the 7th or something? No, the 5th, right? May 5th. Okay. 5 days in advance, we could assume that there was a boatload of orders for traders to get out. And hopefully this is a learning experience. Did did it happen that way? Well, yeah, I think so. I don't think they were waiting to buy as much as that they were waiting to take profit. Okay. And then do you guys remember joking about it, like now that we get down to our technical target, that all of a sudden you're going to hear about OPEC coming out and they're going to make major cuts. And Russia's going to come out and do a bunch of things, and all of a sudden there'll be all these other reasons to go along and trade it all the way back to 55. Is that also something that you remember us talking about? Charles says yes, and then says yes. And I'm starting to hear some things, right? Travis says yes. Yeah. I'm starting to hear these things. I got my ear to the ground and I'm starting to hear jibber jabber. And we're getting closer and closer to June 1st. Tatanka! 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 Yeah. Stands with pips. Stands with pips. Of course. It's part of being wicked smart, Peter. How about this movie reference? I'm a big, hairy American winning machine. I wake up and I piss excellence. That's pretty funny because I'm not American, but you know that one? Yeah, Talladega Nights. Yeah, you got it. All right. So, anyways, so put this in another way. If there is an element of truth to all of this, because we don't know, we're interpreting. So I don't know what other people did. How would I know? So we're interpreting what created this price action through assumptions and such. But there is a level or a degree, say, of understanding what's likely to happen before it happens. And if you believe that that's the case, because at some point you have to get it has to become part of your own belief system that you can plan. You could say, well, it's going to fall to, I don't know, 44.86 and stop falling. Therefore, I should A, take profit on my bearish trades, and B, maybe prepare to go long. Do you remember like the days when you would hold this short and all of a sudden it would stop and reverse and you'd give away 30 or 40 or 50% of your profits because you don't know when to take profit? Oh, problem solved, right? Nowhere to hold them, nowhere to fold them. All right, so according to the analysis last week, it was supposed to go up and then come back down. Huh, there you go. Peso, remember this one? Sell into the new month and then maybe walk away. And I've always been clear, I don't know if this pair falls for 2 days or 2 weeks. It really has to do with the macroeconomics. If it wants to fall anyways, it's going to fall further. Well, in this case, it only fell for a couple of days. But again, the predictability here is you're saying to yourself in the last days of the month, and in particular, this is the last day of the month, I wonder if I should get short. I don't know if you sound like that when you trade. I don't know if you're from the South. I wonder if I should short. And whoa, yeah, so you're right for a day. But the interesting thing is that's enough. And our buddy CAD, how's CAD doing? Well, if you're swinging north, this is your entry. You'd have to be a bear on the Canadian dollar and a bull on the US dollar. And you're basically predicting a double top here. 4 hour says all right there. This says down and then up, so maybe a double bottom then up. You're like, what? What I'm suggesting is something like this. That's pretty hairy guessing. Harry Pippa? Hmm. Clear as mud, huh? Clear as mud. Well, good thing we have it set up for range trading. I think you better decide what you want to do. All right. That's the monthly resistance pivot, weekly M3. A bear is going to take it down here, huh? And a bull wouldn't buy it here. A bull would probably buy it around this gray area, which I mark for you, on Friday. Euro buck. Okay. M3 targets M1. Seems like there's a bunch of junk down there anyways. Okay. Now, of course, the big thing here is 110. And I have it marked here on non-farm payrolls. Isn't that interesting? So there it is. It briefly was above, and now is below. Once again, Dr. Jones, what was briefly yours is now mine. Let's see if you know that. Indiana Jones, you got it. Belloc. And let's look at this. Don't you just love failed fibs? All right, now what? What do you want to do, bro? How you want to trade it, bro? So, you gonna buy this? You gonna sell this? Well, the sell here is clearly M3, M1. So if you're a swing trader, you were salivating. You're like, oh my God. Becky, look at that M3, right? And a bull, what would a bull want? A bull wants down in here. They want to buy it at, you know, whatever that is. So it really comes down to if the other pairs want to head north, if the dollar wants to stay weak. Peter, that often happens with smaller trading accounts. Okay, because small investors that are trading, tiny lot sizes and stuff, they're generally not interested in yield. So if you're a big boy with bigger money, you can request an account specifically for yield. Alrighty then. So without further ado, I'm going to pull the plug since I'm missing like one, two, three monitors, and then some of them have been rearranged. It's just weird. It's one of these things where, today I boot my computer and the boot process has changed. It says, oh, it's been automatically updated. Press F1 to continue. Well, now every time I do it, I have to press F1 to continue. And then it gets to the desktop, like three of my monitors don't work. That's it. Like, again, just some random problem. It's unrelenting. Just like non-stop problems. Lucky me. But anyways, I'm here for you. I never give up. I hope you know that. I care about you. I do. I want you to succeed. It's in my best interest to have you succeed. I think that's cool, right? So we work together, you and I, to make the world a better place by making your world a better place. So, anyways, peace on earth. May the pips be with you. May your profits be above average, and I'll see you tomorrow. Thank you so much for being on my team. I really do appreciate you. Take care, you hear?